Hi guys, Currency Games here with another video. Today we are going to be doing more of an educational video, and we're going to go over the importance of the top-down analysis and using the high time frames before going down to lower time frames for your trade analysis, okay, for your chart analysis, okay. So if you guys like the videos and like what we're doing, let's try and get this channel to the next landmark, because you're 150 subscribers. I've got another podcast waiting to upload for you guys as well. It's already recorded. As soon as we 150 subscribers, that will be uploaded onto YouTube. So let's get into this video. So, importance of top-down analysis. The main reason why we want to start from the high time frames is because we want to get a bird's eye view of the charts. We want to understand what's happening on a macro level, on a higher time frame perspective. Because if you just go straight into, let's say, the H1, the H4, the M15 especially, or even the M5, unless your system and your trade, the way you trade, revolves around just going straight into the M5, you will get lost in let's say what is actually going on in the charts, which can mess you up quite a bit, in all fairness. So it's worth it to make sure that you understand what is going on a macro level. So for example, for me personally, I like to start on a weekly, sometimes maybe the monthly chart, mainly because, as I said, we can find nice draws and find levels where we can expect price to hold, and also not be surprised about possible market reversals. For example, if we had this fair value gap marked out, this is all in hindsight of course, but this is an educational video to be fair. Let's say you had this fair value gap marked out back in December last year and November last year, and you, let's say you knew this fair value gap was here, but no, let's say you didn't even know this fair value gap was here because you went straight down to, let's say, the H1, yeah, and you hadn't gone on a weekly time frame, and the H1 was at this point in price here. Look at how you wouldn't have expected to get massive upside movement from that, but mainly because you were not on the weekly time frame looking at possible levels where we could draw to or reverse, and it keeps you out of getting surprised by the market, okay. Also, when you mark out these levels on a higher time frame, let me also get the replay tool here. When you have these levels marked out on a higher time frame, it helps you to go down time frames and refine that level. So for example, in that 1 week fair value gap, we also here have a daily fair value gap that got filled here, okay, and we also have, probably on H4, if we go down again, look, a H4 block here as well. So you see how you'll always usually find multiple levels within that one level to provide you a lot of confluence. See what I mean? But this all got given to us from that 1 weekly level that we had on the weekly time frame. We didn't start on the H4, we started on the weekly, and that weekly time frame gave us a zone, which is this light blue box, to find our refined areas in, if that makes sense. So it's always good to have a bird's eye view and zoom into the charts, okay. Another thing this does is it helps you find levels that have high probability of holding. For example, a weekly level, yeah, or let's say, for example, a daily level, has a much higher probability of holding than, let's say, a H1 level. Why? Because on a higher time frames, and it's because the banks trade on these higher 4H, as ICT said, the banks trade on the H4 plus time frames. So if you get levels on the H4 on the daily, they are much more likely to hold, and you can base your trades around those higher time frame levels. For example, some we were looking at a few weeks ago on Euro GBP was this order block here on the daily. Now, price action is fractal, okay. Whether you get order book in the H1, whether you get order book in the H4, whatever, price action, order book's order book at the end of the day. The thing that changes these things is the time frame you're looking at it on. And as I said, the higher the time frame, the higher the probabilities that these will hold. Now, when you have, let's say, an order book on the daily time frame, you can then frame your trade and have the context based around that, and go down to the H4, then look for your your fractals to get in, then look for your market structure breaks, then look for your fair value gaps on lower time frames, mainly because you have trust in that daily level to hold. For example, look, this daily order block here held, we then go down to the H4, we see how the H4 break of structure, return back into premium, and it broke again. Maybe we said price action fractal, what do we get here? Another order block. See what I mean? It's a fractal nature. Then you could go down again from onto the H1. What do you get here? A breakdown again. So you see what I mean when I said it's all fractal, and this all came from the daily level. It was top down. We went from the daily down to the H4, down to the H1, and then obviously intraday you can go down to the M15, the M5, M1 to get your refined pinpoint entries. Okay, again, another benefit of top down analysis, it helps you plan in advance. For the daily candle to reach it takes a few days. So all you might do is set an alert here, let's say close to this level. When it hits that, that's when you're active on the charts. So it helps you plan your week, your day, your month in advance. Helps you sit out of trades that you don't need to be in. It gives you the awareness that there's days we don't need to trade. You know what I mean? You won't be drawn into silly setups that you usually might be drawn into if you're just jumping straight on the H4 or the H1. Okay, and it also gives you a good understanding of bias and where you are in the market right now. Okay, so please guys, top down, make sure you do top down. It keeps you out of silly setups, keeps your psychology straight, and it keeps your mental capital in check. Okay, so thank you guys for watching. I hope you guys found this educational, and we'll be back again next time for another video.